Good afternoon, everyone. Am I loud and clear? Looks like everyone's quiet, so I presume I'm audible. Thank you so much, Anubrata, for being a part of this conversation, and very exciting time, I would say. I'll just give a little context to the audience. So, some 10 years ago, the Nachiket More Committee decided to offer or suggested to the RBI to give differentiated licenses. And that's how payment banks were born. Well, we started with about 11, if I remember correctly. Some of them still around, very much around. And now, I'd like to believe that it is takeoff time. And that's why this conversation is so important, to give you an idea of what the action on the ground is, how the larger picture of financial inclusion is being, well, addressed and how that is going ahead. So Anubrata, the India story in a certain sense, how's it panning out?
So firstly, Ashutosh, lovely set of words as an introduction. I couldn't be more delighted to be here. More importantly, I couldn't be more delighted to be here in India at this time. If you really look at the last 20 years, the country's grown broadly 8 times. 4 times 2000 to 2010, 2 times 2010 to 2020. And it's reasonable to assume that it's going to double again, let's say in between the next 10 to 13 years. So incredible time to be here. However, I think what people have missed out is the fact that the next doubling of India is going to really happen on the back of doubling of per capita income in the country, which is not what it has been over the last 20 years. Per capita income in the country has grown more slowly than the growth of the overall country, because India's population has been growing as well. We reached the replacement rate sometime in 2018, 2020. And therefore, the doubling of India over the next 10 years is going to dramatically impact the lives of millions and millions of consumers, creating a completely new financial services market.
Well, I'm sure everyone would like to be a part of that growth story, that digital India growth story that is unfolding. What does it mean? And in the context of payment banks, how would you put it?
So, if we put the economic growth of the country and just chart the growth of digital India, there are actually a very interesting set of numbers. I personally hadn't even realized it myself. But let me just sort of speak this out for the audience here. 2000 to 2010, we looked at a leading set of velocity indicators of digital India, and digital India doubled while the GDP of the country grew 4 times. However, in the last 10 years, digital India has grown 8 times, while the economic growth of the country is broadly a parameter of 4 times. So this gives you a sense that the rate of change of digital India is accelerating, and it is reasonable to assume that therefore what Dilip said yesterday, that UPI will move from 10 to 100, is a story which is certainly here to stay. It's really on the back of a changing set of consumers. Earlier, we used to have this aspiration set of the fridge, the washing machine, the AC, and the TV. Right now, the foremost device of importance is a smartphone. You're going to have 800 to 900 million smartphones in India over the reasonable future. And therefore, the growth of this consumer set with rising per capita income, in our mind, is a 500 million consumer opportunity waiting to unfold. And I'll directly jump to the next question which you asked, Ashutosh, which is, if you really reflect on this, the smartphone in India, digital India, and economic growth, which is resulting in per capita income growth, payment banks are at the heart of that entire ecosystem for 2 or 3 very simple reasons. First, payment banks are the only licensed fintechs in the country today, licensed by RBI, access to UIDI, facilitated by NPCI. The second is the license allowed to payment banks actually gives us the freedom and the ability to really radically disrupt cost structures of traditional banking. Finally, it gives the ability to deliver, which is so rare in the fintech world. It gives the ability to deliver an omni-channel experience, both on the mobile as well as on the ground. And the simple fact is that the payment bank industry today is touching 150 million lives on a monthly basis, which is far larger than any other fintech category in the country.
Very interesting. It's a traditional banker who's doing this. You've been a traditional banker and you're talking of what the future lies. Now, a point that I'd like to make, and probably the audience here realizes that and have been driving it, the change that you spoke about will be compounded at a rate probably that we may not have imagined. So what could that change be in the eyes of Airtel Payments Bank, and how deep could that change be?
So, given the context of payment banks, I think Airtel Payment Bank has been attempting, and I dare say we have been successful in building a fairly sustainable model. I'll just give you a sense of this. Today, Airtel Payments Bank is really the only bank, or let me say the licensed fintech, with the ability to take in a cash note at the remotest point in India, process it and distribute it back to a rural consumer or an urban consumer, and take that consumer experience and put him into a mobile banking app. If you deconstruct this, we are the largest microcash player in the country today. We have a B2B business which processes more than 5,000 crores of cash every month. We are the largest inclusion player in the country today. We are deeper than any other financial institution in the country, in the remotest parts of the country. And we are the fastest growing digital bank in the country today. We have actually become one of the top 6 mobile banks in a very short span of 3 years in the country. Aggregate, this is between us, aggregate, and of course, between all the members of this room, we are now at a 1,700 crore revenue run rate annualized. We are easily over a $30 billion processing GMV company, and we touch 60 million lives every month. Therefore, our attempt at success has really been to create what I call a high volume, low cost transactions factory. If you're able to re-engineer the cost base, which is what the license allows you to do using the India stack, then you can really target consumers with a different, I'm using a telecom term, different ARPU, and therefore really able to scale across tens and millions of lives. We are at an early stage of this. Our personal belief is that you will really hit tipping points at a scale of 100 million lives, which will mean that the payment bank industry can easily serve 250 million lives every month.
It's a very interesting point again that you've mentioned, because let me tell you the larger history of Airtel. You spoke about the cost structures, disrupting the cost structures. Airtel, about 20 years ago, disrupted the model with its minutes factory model, and then with the outsourcing of IT, something that the entire industry learned from Airtel. Every telco in the world, almost any telco that matters, has outsourced its IT, and that was started by Airtel. So is this the beginning, the numbers, the astounding numbers that you're talking, is that the beginning of a possible disruption then?
Yeah, so firstly, let me tell you,
and if I may add, sorry, because there's also a roadmap, the larger roadmap that the RBI has for Not just payment banks, even the small finance banks and others.
Yeah. First things first, I borrowed that phrase shamelessly from Airtel's aspirations. You know, I like this phrasing and the framing of a services category almost into a manufacturing one. And the high volume, low cost transaction factory absolutely is the model. But let me take it one step further. Today, we are able to offer services at a cost of between 18 to 20 rupees per month to a user. We are processing, give or take, around 8-9 billion transactions annually. And this is allowing us to offer services at this cost. I do think we have the opportunity to go to NPCI levels of cost per transaction, which will ideally drop our cost per transaction to a tenth of our existing structure. A tenth.
Tenth of what it exists
Because
now.
NPCI is already operating at that level, and that's really our inspiration. You need the consumer uptake as well. And therefore, the narrative of the sustainable model on the other side, today we have a revenue of anywhere between 23 to 24 rupees per user. At the core of this revenue is what we believe is where India's journey is going to be, which is unbundling of services to a point where consumers are able to pick and choose the best possible model for them. So at our journey of unbundling is a flat rate, no minimum balance bank account, which is now driving more than a third of our total revenues. And this is in the context of India, which, as you know, has a very high savings rate, which is certainly not helped by minimum balance requirements of banks. And indeed, the minimum balance requirements of banks, we all read, creates a fee market of 21,000 crores in minimum average balance charges. We believe you should do what you say on the tin. You offer a simple, transparent service at a very nominal cost, and people essentially pay for access and convenience. And if you want to operate on that model, the journey is 100, 200 million more. And I can talk to you a little bit about the way rural users, for example, have taken this.
I'll come to that. And you use the term unbundling. So since you mentioned rural consumers as well, give the audience a sense of what that unbundled service could look like. Probably a couple of examples.
Sure. So let me use the rural example straight through. See, now we get into a bit of detail on our actual businesses. So today we are the largest bank on the rural side for a simple reason. We operate 397,000 monthly active banking points. If you really deconstruct India, you've got 500,000 villages with population of 2,000 or below. This, according to RBI statistics, is banked by 350,000 banking points. Roughly 240,000 or 250,000 banking points are actually Airtel payment bank points. This is dramatically different from the traditional BC model, which is really, as you know, a roaming model. This is the son of a local village retailer, the wife of a local sarpanch, who operates a banking point of Airtel Payment Bank and bridges the gap between digital services and banking by offering trust and equity. What this person does is fundamentally offers a bank account which is actually in the vicinity of around 500 meters from the villager's home. As you know, 300 million people in India live in rural India, where the average distance of a bank branch is 11 kilometers. And consumers want to use this bank account to withdraw money for a range of deposits, including government subsidies, remittances from cities into villages, and disbursements of loans. This, therefore, allows us to offer an equitable service where the consumer pays a nominal amount. We have realize that the consumer actually values it because he or she recognizes the value of that service. And therefore, our accounts are far more active than the traditional banking system in this network or service area.
So it again catches my attention. You use the word the wife of the Sarpanch. Can you explain also on how important is the role of women in this entire reach that you're talking about? Because that adds a different element. Traditionally, we've had an issue where women are not part of the workforce, or that number is dipping. That's what the numbers seem to show. But here we could be changing the story.
Yeah, so look, I'm going to go against the grain a little bit because, you know, historically how as Indians, we have looked at consumers below a certain per capita income threshold has always been with the lens of what I would call charity. But increasingly we've seen that consumers or micro market consumers who are just coming onto the threshold of better per capita income levels become self-serving markets of their own and self-generating in a sense. So now let me build on this theme of diversity which you just picked up. See, out of this very large banking network, we have a disproportionate share of women. So we all know the labor force participation rates, we all know the contribution of women in the rural economy, but roughly 20% of our banking network is actually run by women. And there are some interesting data-driven facts which I want to share. Firstly, they are more active and their age on the network is higher than a traditional banking agent of ours. Because their transaction levels are higher, they actually earn more than a traditional BC agent. And the simple insight underlying this is that they are actually trusted far, far more than anybody else in the community. Now, not only are they actually offering banking services, these agents are actually themselves also entering what I call the first few steps of financial security. Our analysis tends to indicate that these women also have recently upgraded to a smartphone and they have opened a savings bank account in their own name with Airtel Payments Bank, where they keep their earnings separate to their family. So we feel proud that we are part of this, almost if you will, a cultural transformation taking place in our very heartland. And therefore we feel that we can drive this more. We've just announced a partnership with Frontier Market and MasterCard, where we've taken a commitment on to drive and take forward the Women BC network and increase this 20% rate to something close to 30 or 40%, which means getting in 40 to 50,000 more agents into our fold over the next year.
And these all stories unfolding in tier 5, tier 6, and even smaller places?
That's right. Predominantly, I mean, I would say our rural story is tier 4, 5, 6. And of course, we've got an even, or I would say equally compelling narrative playing out in metro and urban for a reason we couldn't have anticipated, let's say 5, 6 years back. But I mean, if you will, I'm very happy to share that. The fact of the matter is that in urban India, people are increasingly demanding and wanting a secondary bank account. They want a secondary bank account because they don't want to expose their main bank account to digital frauds, and therefore they want a payment account. And now you have layers and layers of this needs emerging for secondary accounts. They want a separate transaction statement for micropayments. They want a secondary account because they don't want their main account to be compromised. And a new emerging sub-trend is coming out. There's a site called Reddit, which I follow quite closely, and there's a sub-thread called scams. One of the recommendations in that scam sub-thread on Reddit seems to be that in India, you open a secondary account and use it for transactions because your main account could get frozen anytime, because right now, police in any state can claim a freeze on your bank account in any other state. So you have no control over it whatsoever. As a result, we have a digital account onboarding process. We have an app embedded in one of the top 5 app ecosystems in the country, which is Airtel's. And as I mentioned, we are in the top 6 banks in mobile banking in India. This is our fastest growing business, accounting for 20% of our revenues. But equally, a very different consumer set, very evolved. We call this, from our insighting, as 2 cohorts. One is an urban sophisticate, primarily a person, Ashutosh, like you.
Oh my God.
And an urban striver, somebody who's come into the city for working and earning and sending money back to his or her town or village.
So can you shortly mention what could be a model? So any global companies which are payment banks, India's payments bank, could be like?
Yeah, so I want to use this example of this bank in Brazil called Nubank, which today is roughly around 83 million users. It's 10 years old, but it's the 4th largest financial institution in Brazil. Interestingly, if you look at the growth of this bank over the last 10 years, from the first 6 years, it moved from 0 to 20 million users, offering one product, which is a credit card. And the next 4 till now, it grew from 20 million to 83 million users, and it increased its product range from 1 to broadly 8, offering bank accounts and whatnot. I think payment banks, and certainly Airtel Payments Bank is at that point today, where we believe that if you are able to manufacture more products, be it a fixed deposit, be it a loan, we are at that inflection point. We have come to a state of the industry of 150 million lives, Airtel Payment Bank touching 60 million lives, and we can now rapidly reach tipping point and move our user base up. Airtel Payments Bank aspiration is to be in the high hundreds if we are allowed to manufacture products, and therefore really impact millions and millions of lives at scale and be India's new digital banks.
So unbundling could be the tipping point.
Unbundling could be the tipping point, but importantly, distributed services almost at a connected commerce level could mean that small transactions touching hundreds and millions of lives is the new big.
My God, too many messages to take. Would you like to sum up? Because we're running out of time and we also need maybe a couple of questions.
Only one, my last one. Small is the new big, driven by unbundling.
Driven by?
Unbundling.
Okay, okay. That's terrific. And you know, one of those points that I'd mentioned also were that critical mass of digital consumers in tier 6 or whatever tier 6, 7 cities could be getting ready because of this habit of.
Yeah, as I mentioned, I mean, high level, if you look at it, rising per capita income levels will mean a 250 million consumer market. Rising digital levels will mean another 250 million. Aggregated 500 million consumer opportunity.
Well, unthinkable. So I'd also like to open the floor for questions. Maybe the lady, yes ma'am, if you can get a mic, identify yourself and ask the question, please. The mic is coming to you.
Hi, my name is Shreya. I have a simple question about the future of payment banks. Like you said that it's the multitude of products that you can offer. By regulation, you're not allowed to sell loans, underwrite loans. You can cross-sell loans. So given the customer segment that you operate in, and as payment banks are evolving, how big do you think will lending become for any payment bank and specifically for Airtel Payment Bank? Thank you.
Yeah, so look, payment banks ultimately are a model of scale. You will see that in the market there are two categories of payment banks, one who've taken the hard call of investing and building scale over a period of time. Our assessment is that it takes 4 to 5 years. Once you reach that point and you're profitable, then the questions of the model actually get laid behind. So our argument really has been that we are able to transform and impact far more lives if we are allowed to microlend. And our belief is that the payment bank model, therefore, in itself is well designed to scale further if you are allowed to manufacture. Let me sort of summarize by saying that, look, ultimately, we have to think about the 24 rupee model of revenue going to 30 or 35. Where is that going to come from? It's going to come from more usage, but equally it's going to come from more products. So our final assessment is that payment banks could well be placed to serve India well if payment banks are allowed to offer more deeper products.